All right. So once again, you are welcome to the channel. Once again, that's Success and Harmony 247, where you learn things and tools that will help you to become successful as a trader, as an investor, and life generally. So today we'll be looking at a very important tool that every trader should be using. And I tell you, once you have a grasp of this tool, you will not lose an account again. One of the things that the brokers want to do to you is to make sure that they take your money. And then they tell you, you must use stop loss, you must use stop loss. And I tell you, using stop loss, once it hits stop loss, the money is gone. In every bank, there's what we call the Treasury Department. And what did they do in the Treasury Department? They trade the forex market. Now, the forex market that they trade there, they don't. I asked a lot of them, they don't use stop losses in their trade. What they purely use is what? Hedging. So if you understand hedging, which we're going to do today, I want you to understand it manually so that when you see the EA performing, if you get to use the EA, you will use it and you will understand how it is working perfectly. A lot of persons don't even use the EA. They understand this principle and they trade it. The EA, as I said, is meant to enhance your work. So let's dive into it and go see how does this EA work. Please pay attention. If you have to watch the video, you have to watch it again and again and again and again. Please do yourself that favor. All right. So the red arrow and the red candle signifies market is going down, and the green arrow signifies that market is going up. Now, when you talk about hedging, you are saying that a position where you have equal lot sizes in the buy and in the sell region. But for us to do that, there's one particular tool that we use in this in our thing. It is called the price hunter. So let me put in the price hunter here. I put it on the chart here. So you need to have an understanding of the price hunter so that how it works, so that it's going to aid your understanding. On any time frame of a chart, you can always see what we call the verified resistance area and the verified support area. In any market, you have the support and the resistance. What do we call a support region? A support region is a region where price has tested severally and has been rejected from that region. Now, this zone, you see this red zone, is the resistance area. Most often, when price gets to the resistance area, it will come down. So, why do we call it a proven resistance area? Is that, or a verified resistance area? Because price has come into this zone severally. There was a time the price came into this place and they pushed price out. Price came into this zone again, it was pushed out. Price came into the zone again, it was pushed out. Now, you see, this time around, it came here, it was also pushed down. There's every likely tendency that if this price enters into this zone again, it will be pushed down. So, all you hear traders say, sell at support, sell at resistance and buy at support. So, we have this verified resistance. So, when we talk about verified support, is the place where price has touched severally. Look at price came here, it was pushed out, pushed out, pushed out, pushed out, pushed out. So, even if you only want to trade with, because it has its own arrows, you can see it has green arrows. Anytime price is pushed out, I want you to see this. When price, look at this arrow comes. When do you see this arrow? When price enters into this zone and then comes out of the zone, this arrow is printed. That is when your EA takes a trade. Price enters into this zone, push out of the zone, it will print an arrow. Let's look at in the resistance area also. Let's do this so that we can get the picture very well. Let's do this. Indicator list, price hunter, edit, color. Let me take. I want to make those arrows white so that they can be very visible for you. Okay. I think it's better now. Here now, you see that anytime price enters and comes out of this red zone, an arrow is printed. Anytime price enters and comes out, look at when this candle closes outside this red zone, you see that the arrow is printed. Now, On the higher time frame, the higher the time frame, the more stable these arrows are. When it enters in the 4 hours time zone, time frame, it tends to go down very well. And when it happens in the support area, that is why if you are looking for a very good signal, you can pick very good signals from this support and resistance that is provided by the price hunter. I believe you are getting me. All right. I just established that. So most of the time we buy, you say buy at support. So when I see this arrow come out, I want to buy at this support and I want to sell at the resistance. Why do I want to sell here? I will sell when this candle comes out and closes and the next candle begins to form. Guys, please listen to this. Those of you that want to use it manually, this is what you do. When price enters into the support zone and then comes out and the candle closes and you see this arrow, then is the time that you can buy. Don't buy because you see this arrow here and the candle that is forming it has not closed. Again, don't buy when the candle is forming. Buy when the candle has closed. So you look at this green arrow. You see this green arrow? By the time this candle is forming, because this small candle here, it took 4 hours for this candle to form, all right? So by the time this candle came out, it will be, you see this green arrow will appear and disappear. It will appear and disappear until the time closed. Some people say, "Oh, I saw the arrow, then the arrow disappeared." Yes, you did not wait for the candle to close. So when the candle closes, where do you take your trade? The next candle to it. This is where you take your buy. And you can imagine if you are taking your buy from this point, oh my God, just look at this, guys. It goes all the way. This is about 83 pips. This gives you about 83 pips. If you are using 0.01, that is about $8. If you are using 0.1, that's $83. And if you are using one standard lot, that is $835. Man, that is fantastic, guys. All right. So that is the way the EA picks its trade. It picks when this arrow comes out. All right. So now the EA has picked a trade and it has started trading. Now let's take this place for instance. I want you to see this arrow here. This arrow here, the white arrow. I'm circling it at this point here. You see this, the market said it's going down from here, and then boom, the candle closes. When the candle closed, boom, you entered. You took a buy, a sell, of course. So let's look at it from here. You sold here. You sold on this line. You sold here. So let's put something here, a comment here that this is you sell at 0.01 lot size. That's where you sold the market. That's this level. You were expecting that the market will go down. You were expecting that price will go down. Now, if price comes down, let's take this again. If you sold at this level and price came down immediately from here, from this place, assuming market came down, by the time it gets to about this area, this is about 300 pips here. 30 pips. You will have made your $3 there, and you are out of the market. I'm sure you can see where I'm seeing my $30. See, look at this. Just look at where my look at this. What I did, I clicked on this crosshair sign like a cross at the top here, and I brought it to where our entry point is. I clicked on it and dragged it down. Now, the first number there that shows 6 shows how many candles I have covered. Then you'll see 273. You are ignoring the last digits, which I call pippets. You are considering just the first 2 digits. So this is 27 pips. 27 pips. If you are using 0.01 lot size, 27 pips is about $2.7. $2.7. If you just, let's assume that we've taken care of what do we call this? Is it margin? The broker's margin. All right. So if you come down, that means, look at guys, if I come down here, it's telling me that from this point to this point, I have covered about 30 candles and is about 73 pips down here at the price of 0.86138. I think you can easily get this. This is very, very understandable, all right? Okay, so if market comes down to this level, you make your profit and you're out of the trade. But what of in a situation that, just like it happened exactly here, when you enter the market, boom, instantly, look at the market started going up. It started going up. It started going up. Now, it has been programmed in the EA that once price gets to 50 pips against you, please listen to this. If price goes 50 pips against you, that means it's not going in your direction. So that means we are saying at about this area where we're having 503 or thereabout. That is when price is about 0.87 something. All right, let's go bring our line here and put it here. So I'm going to make this line. Let me make this line a white line, or yes, let me make it a white line, so that we can see it properly. I'm just trying to show you the manual. So this is our selling point. Please, you pardon me. Let me just use this line sparingly. Let me bring it down here and assume, because we are going to go a little bit high. And if I don't have enough space to do that, you are not going to get the deal. Or let's let's do this. Let's do this. You understand why I said we should sell here, right? So, but now I'm going to put the sell something around. I want to have space to do the demonstration at the top. All right. So let's say, let's bring it down here. Let's bring it down. Okay, let me bring it down to this place. Let me bring it down to this place, all right? And I'm just illustrating. I want to have enough space so that I can do the illustration upwards. Okay, so we sold for whatsoever reason. This trader, somebody gave you a signal and they say sell, and you took a sell. This is just coming back. Why? Let me do this. Come on, chart. When your chart is scrolling, it's not allowing you to scroll to this side. Just do this. It will, so I can scroll to the side now easily. Okay, all right. So here, very good. This is a good place. Let's come here. This is where we sold. We saw this red line, and we say, wow, market is going down, and we took a sell here. But when we took a sell here, the market went down a bit and then reversed and started going up. When it gets to about 50 pips, now for you, if you are not using the EA, you can determine where your own 50 pips, just measure 50 pips. Do you understand? Because you don't want to jump into trades anyhow. So I entered into the trade here. I will calculate 50 pips from my entry. I've shown you how to calculate pips. If you don't know how to calculate pips, go and watch the video. I have a video on pips calculation. So you calculate 50 pips upwards. Now I'm going to put up what I call a sell stop. This is where I'm going to put a sell stop here. So let's come here and down here and say sell stop at how much? At 0.01 lot. At 0.01 lot. All right. So here, we entered here. The market went. We are saying if the market goes against us, then enter another sell at 0.01. We entered the first one at 0.01. Now, the market went against us, is going to take up another sell again. All right. Now, why is it selling? The idea is this. When it sells, if the market sells and then comes down, look at just like it came down here. When it's selling, it will be making profit. This one too here will be this one, the loss of the first one will be reducing. So when it comes here, the profit will have been made. It will close the two of them. This is not yet hedging. We have not hedged. We are just in the process now. But unfortunately, the market did not come down. It continued to go up. Let's now see it again. If it goes up again by another distance, we say take another trade. This time again is going to be a sell. It's going to be a sell, guys. So let's look at it. It's going to be a sell stop. Let's put a sell stop here. So we have what we call another sell stop. Sell stop, but this time is going to be at, this one is going to be at 0.02. Guys, if you are a trader here, you've been trading before, I want you to follow this and you will tell me why an account will blow in this situation. Now, the first one is a sell, the second one is a sell, the third is a sell. So how many lot sizes do you have? You have total of 0.01, 0.01 plus 0.02. That means you have what you call a total of 0.04 sell. Now, this account will be going in negative. Now, the idea is this. If the price of the market at 0.02 begins to come down, wow, that is good profit. That is good profit. So this one will come down. You know, this is what we call dollar cost averaging. DCA, for those of you that don't understand it, dollar cost averaging. Because remember, when we enter the first cell here, maybe TP was around here. TP will be around here. Let's take up a line. I'm going to bring up another line here and put it here. This line, I'm going to make it green because that is our TP line. Let's make our line here green. Okay. So this line is the take profit line. So when price comes here, assuming it came down straight, boom, it will hit this line and it has hit TP. But the moment price did not come down, price went up instead of coming down. That means we'll be making a loss. So we said if it goes against us, enter another trade of 0.01. Now it entered another trade of 0.01. Do you know what will happen to this TP? This TP will come up a little. It will come up a little here because it is now doing what we call dollar cost average. The higher price goes, it will be pulling the profit upwards. So when price came up to 0.02 here, do you know where our take profit will be? The system will bring the take P to maybe somewhere around here. So that means we don't need to get all the way down for us to profit again because we have 0.02 at this level. So we can get to this place and boom, the system will close us in profit. I think we get that. We get that. Okay, now the next thing that we're going to look at is this. We are in the trade. We have 0.01 lot size, and we have 0.04 lot size now, all right? And the trade is still going against us. So the next thing, this is where hedging is going to come up. Now, if I have a stop loss here, once the price of the market gets to the stop loss, even if I have lost $10, it will close the whole trade. But do you know what? In hedging, I have determined that in my account, I don't want to risk my risk level. Follow me, please. My risk level here, my risk is 2.5%. My risk is 2.5% of my capital. All right? Risk. We're going to put it there. Risk is 2.5% of my capital. All right. Okay, boom. This is what I'm risking in this market. All these places, there's no risk. I'm just trading. But if for any reason the drawdown from this thing continues to go up. Look at, even when it got to this red zone, it continues going up. I can't leave it to just continue going on Yahoo like that. I have to set a boundary. My boundary is 2.5%. Now, let's now assume that my capital, let's do another assumption here. My capital is $1,000. All right, my capital is $1,000. So if my capital is $1,000, 2.5% will be equal to what's that figure, guys? It's going to be about $25. All right, $25. Okay. Oh, why is it so small? Okay, let's make it bigger. Let's make it bigger than this. Okay, so our capital is $1,000. All right, capital is $1,000, and 2.5% is equals $25. Okay, all right. So I believe you are getting it very well here now. Now, my instruction to this EA is that if price gets to $2.25, you know these three trades, 1, 2, 3, 0.01, 0.02, 0.0. Now, if the drawdown gets to $25, please protect my account. Protect my account. So what it means is this: if the total, let's come to this level here, let's come to this point here, at this point here, you know, all this sell now, they are in serious drawdown, and by the time it gets to this place, it becomes what? $25. Total drawdown, negative $25. Do you know what will happen? The hedging principle says, look at it, the hedging principle says, let's make this a blue line. It's a blue line. The system we add up 1020101. It will add them up, and it will buy at 0.04. It will buy at 0.04. Please, for those of us that are professionals, I'm sorry, I have to take the time. We have a lot of new the beginners in the class, so you got to bear with us. So we have buy, hedge. We say hedge at hedge at, that's $25. Hedge at $25. Total lots will be 0.04. Okay, 0.04. Okay, all right, guys, that's it. So at this point here, it is going to hedge and buy. Hedge at total lot. Okay, sorry, so that we get I'm just trying to make it so I can just follow. I will call it buy. A total buy lot. Let's call it buy lots of 0.04. I'm explaining this so that when you are watching it on your own, it will be easy to understand. Now look at it. We have sell 0.01, then it went to the another sell 0.01, then another sell of 0.02. Before it can hedge, it must have reached our target risk level of 2.5. Now we use 2.5 for funded accounts. So when you get to this place, it will hedge. Now what does this mean? This one is now 0.4 and this one 0.4. At this level, the loss cannot be bigger than $25 again. The loss can never, if you leave this trade till next year, especially if you are trading the good pairs, the majors, where in the FS majors they even give you positive swap. Do you understand? When you trade the FS majors, they give you positive swap. Swap is where you leave a trade overnight and things. Instead of them minusing, they will add to you. If you have those kind of trade for the next 1 year, 10 years, that is how that trade is going to hand. The profit or loss, the loss cannot be more than $25 because it has been hedged. So at this point, what happens? The EA stops working, and now you are invited to come and clear this hedge. How do you clear this hedge? Now, because somebody said, it's when it's hedges, it's not a problem, but how to clear the hedge, that is the challenge. Now, let's look at how to clear an hedge once the system has hedged. Guys, don't be in a hurry. When it has hedged, don't be in a hurry. You wait. You know when the thing hedged, you see this red sign is not necessarily there. This red something, we are just using this as an illustration now. So let me use another chart to illustrate that aspect for us now. I'm going to use another chart to illustrate the hedging. Okay, all right. Okay, you can see this something like it. You can see this. I'm sure there's another. This cell, this account now is not properly edged because it was this 0.04 and you have 0.02 buy here. I think, okay, what happened here was, you see, this is what I'm saying. But don't let me confuse you. Let me just use another place so that let me use another place. Okay. All right. Let me use this. Let me use this particular one here. Let me use this particular one here, guys, so that you understand. I want you to understand how to get out of hedged positions. How do you get out of hedged positions? All right. Let's delete this, and okay, I can leave this one. Let me leave this. Okay. Now you can look at this. Look at this particular one. This buy. Just like what we had, all right? This sell of 0.0 something there, and there are other cells. So this sell. So we have this exactly like what I have explained. Do you understand? Now, I want to, when do I want to trim my account? You will agree with me now that this buy now of 0.04 will be in profit. It will be in profit. So we have what we call trimming. Now, what am I going to do? You remember that when we entered at 0.04 here, there was some lot sizes 0.02, 0.01, 0.01. You will agree with me that as 0.04 buy continues to go up, it's going to make more money than the 0.01 that is coming up. So you will use this profit of 0.04 to close. We call it partial closing. Just make sure that you reserve some profit. So maybe this one. So maybe the buy here, this buy could be like $100. It will be like $100. And here you are having this 0.02. 0.02 could be like $50 or something. So what you just do, you use that $100 of buy to close maybe this $50 loss. So that means you will have kept about $50 profit for yourself. Now, you've closed 0.04 and you've closed 0.02. What do you have? You still now have 0.01, 0.02. Now, let's come back to this place. I don't want to do my training or work on my account until I have price around the zone, whether the support zone or the resistance zone. This is where I want to take action, at these zones here. Now, why do I want to take action at these zones? Like for me now, for this particular zone, I'm not even ready to take action here because this is an untested resistance area. This resistance is an untested. So that means there's a high tendency that price could pass this place. Let's check it out on the 4 hours. This is 1 hour. Good. Now, look at it here. On the 4 hours here, this is what I want to see. Look at price is entering this zone. This is a verified resistance zone. And what happens in verified zones, it will look at when price entered this zone. What happened? It came down. Price has entered it again. There is the high probability that it will come down from here. Mark my words, probability. Now, if it comes down from here, this is the best place I want to operate in. So what I want to do is this. This is a 4 hours resistance. Fine, I've got it to a zone. Now, I will go down to my 1 hour. What will I be looking out for? I want a situation where I will see an arrow saying down from this point. If I see an arrow, because for me, I have 2 indicators that I look at in this situation. I have the price horizontal and that trend following indicator. This is called the half trend, all right? So now it gets to this place. This one will show me an arrow that, okay, price is ready to come down. When I see, I don't just, it's not because, even if I see an arrow here saying coming down, and I don't see that it is within a verified resistance area, I'm not going to get out. So once I see that, that is when I want to close this buy. I will close this buy. I will use this buy to close the profit here, to close some of the sell here. And you know, when it begins to sell, what will be happening? I'll be recovering my money. I tell you, ladies and gentlemen, this price can come down. It can get down even up to this level and then even give you profit even at this point. Ladies and gentlemen, for those of you that understand trading, do you see why we say that with this strategy, you will not lose money to your broker? This is a powerful strategy. But now we are saying that instead of me sitting down babysitting this trade, why don't I use the EA? So if I come here and I check my EA here, is the EA here? Sorry, a lot of things going on in this place. Sorry, it's not here. Oh, why? I thought okay, I'm not using the server. I'm using this site, the ordinary, because I have it on my server. This is just the MT4 on my desktop, all right? So I wanted to show you the EA, how the EA will do all these things automatically for you. Ladies and gentlemen, I believe you understand this. And you see, for those of you that are trading funded accounts, you see, you can put your hedge at 2.5%, depending on your capital. You see, 2.5%. Let me explain something to you from here. Let me explain something to you here, guys. Let me explain something here. Okay. Oh, I thought I said stop presenting. Okay. All right. So here, you see, the reason why you need to be careful when it comes to the percentage risk that you are applying, your percentage risk, be careful. You can't have you can't have $200 and then you are using 2.5%. It's too much of a risk. What is 2.5% of $200? That's about $5. If that means you'll be hedging on time. If there's a little movement, 50 pips, you've hedged. So you put the hedge, you're going to put the hedge at maybe 5%. That's if you are trading $200. But if you are trading like $500 and you are trading a funded account, it is a funded account, you can put your hedge at 2.5%. 2.5% of $500, that's about $12.5. $12.5. And that is just good enough. $12.5 out of $500 is not going to kill you. So that's why you can risk that level. Now, if you have $1,000, you can put it at 2.5%, or you can even put it at 5%. 5% is much. But they just put it at 2 for funded accounts. If it is just your personal funds, you can put it at 5%, because 2.5% of $1,000 is 25. 5% is 50. And before it gets to 50, there's a likely tendency that it will come down. The price will come down and go in your direction. But whichever it is, always make sure that you are hedged. So for funded accounts, we always advise 2.5% if you are using the automation. So if you are going to be doing it manually, you must calculate, understand that lot sizing. Ladies and gentlemen, if you don't understand lot sizing, it will be difficult for you to get this done. And I think if you talking about lot sizing, like I said, if you go watch some of my videos that I did on this, let me share this screen with you again. Please, you need to have good understanding on lot sizing to help you navigate and do this thing properly. All right. So let me look at this place. Just a moment, we wrap up now so that we can take one or two questions. Okay. All right. So if you come to the Rich Vision Academy website, this is our website here. If you come here, we're still doing a lot of work here though. But then when you sign, it is ready for you to go. If you sign up, you click on get started, you sign up. Once you sign up, and you can just sign in at any time. Now, when you sign in here, it tells you it's going to welcome you and things. Now we have the videos for beginners. So if you're a beginner, you can just come here. How forex really works. Click on this. You will watch the video. There's a video that explains how the forex market works. Now, the second module, as you finish it, is an academy, guys. So as you are finishing it, you see your progress 17%. Then this one tells you you've completed it. Then you come to this next one, the lesson here. If I click on start lesson here, it brings up a video, the smartest way to trade. And here, okay, that's just it there, guys. So when you finish watching this, you go to the module 3. You can't open the module 3 until you've done the module 1, 2. Then this one tells you how do you read these charts and candle. How do you get the candles, the momentum, and everything? Then MT4 in action. This is where you see those price action that I talk about. And then you see this place, protect capital, smart risk and sizing. This is where you do, I taught on how you calculate your lot size and all these things on this particular page. So do yourself a lot of good. Just go there. And then here I talk about the routine plan, checklist, and money management, and so on and so forth, guys. So you want to help yourself by going to this place to make sure that you learn this skill. Do you understand? Please help yourself, do yourself that favor. If you are really serious about learning this forex system, I think it's good that you go take that aspect one by one, understand it. It will make using the EA even very, very easy for you. So, ladies and gentlemen, I would like to see or hear your comment. I want to see your question. You can put your comment in the comment section. I tell you, with this strategy, you are secured. Your account is safe. You can join our community, join our YouTube, our WhatsApp group, and so on, where we'll be doing more explanations for you. So I want to say thank you for being on the call, for joining us on this particular day. So go watch it again, learn it over and over again. It's a strategy that will keep you from blowing your account. It's your friend and partner, Olushola Popola. Thank you.
Waking up at dawnlight, breaking through, chasing dreams, no time to lose. In this race we strive and grind, motivation fuels the mind. Gonna rise up, we won't fall, breaking barriers through it all. Step by step our journey's clear, success is closer, don't you fear. Challenges we face headstrong, in this rhythm